Good evening, class. Let me
Good
hope that,
evening.
yes, good evening to you. Let me hope you're well. I just want to know, you can just type in the chat, those who joined this class on Monday. I think some of us joined on Monday and you've not been with us. I need to know who joined on Monday so that I know how to quickly run through what we went through before you join the class. I can see Joseph.
Yes, hello. This is my first class.
All right. Namkade, did you join Monday? Joy. Please confirm that you joined on Monday or today. Okay, Timothy joined on Monday. Okay. All right. So some of us who have joined either Monday or today, our colleagues had an introduction to the paper, but what we've been going through basically is double entry, which is like the basis of this paper, financial accounting, or it's the foundation of financial accounting. And Salome, kindly mute. Thank you. So those who joined on Monday, you found that we are just discussing T accounts or ledger accounts. But before that, we discussed journal entries and also the basics of double entry. I'll invite two of our colleagues, any two who prepared T accounts. So I don't know how you're going to project them. Maybe you'll just present, You'll just present at least two T accounts. Those who prepared them for Kasango. In case anyone prepared T accounts for Kasango, you can volunteer. You can present one T account. Then another one can present another T account. Then I can be able to share with the class the solution. Anyone willing to volunteer? I can see people are in this class. We have Martha, Gloria, Mading, Babirie. Okay, Babirie, you can just present to us at least one T account for Kasango. The debit side and the credit side. Babirie, are you in position to share? If you are, kindly unmute. Okay, so Babirie is telling us for the capital account, she has 14 million, both on at the bank, and 14 million both at bank for credit side. Okay. Any other person? Any other person? Okay, let me just share my solution with you. So in my solution, I didn't write the entire amounts in full. I used shillings in thousands. but I'll quickly take you back to the journal entries. For those who joined class today and Monday, don't worry, I'm going to give you a recap. I'm going to do a recap in this session about double entry. So for Kasango, we had these journal entries, which I also shared on the group. On 1st June 2019, bank account debited 10 million, capital account 10 million. Then the list goes on with the other entries. So Babir is telling us that 30 million, 240 for bank account. Okay, so now we are going to first identify the transactions for the bank account. So this on 1st June 2019, bank will be debited with capital of 10 million. That is bank. Then on 4th July 2019, bank was credited. No, I have highlighted the wrong transaction. Bank was credited with a motor vehicle of 3 million. On 6th August 2019, bank was debited, no credited, not debited. Bank was credited with petty cash of 1 million. Then on 18th August 2019, bank was debited with a loan from Jarvis. Then on 30th August, bank was still debited with capital of 4 million. Then on 18th September, bank was credited with purchases of 9 million. We had a lot of bank transaction. Then on 24th September, bank was credited with 3 million from Super Furniture, or we are paying a creditor. Then on 19th November 2019, bank was debited with N Shambles, a debtor who was paying, a customer paying. Then on 22nd November, bank was credited with rent. We are paying rent for 500,000. And on 14th March 2020, bank was credited with 4,850,000 because we are paying a creditor, Super Furnitures. So those were the bank transactions, and we shall go to its T account. So as you can see, the T account appears like this, the way we presented it for Lokodo. This is our bank account. We have the debit side, we have the credit side. And we've already identified that on 1st June 2019, 10 million capital account. Loan account, 7 million, that was from Jarvis. Capital account, 4 million. Then N Shambles paid 5 million. It also paid 4,240,000. Then on the side of the credit, we bought a vehicle at 3 million, withdrew money for petty cash, 1 million, made purchases of 9 million, paid Super Furniture 3 million, and paid rent of 500,000. And our balance carried forward to balance off these two accounts, the debit side and the credit side, the two sides, was 13,740,000. at the end of the period, and at the beginning of the period, it will be our balance brought forward. That is for our bank account. Capital account, that one it will be easy for you to identify. I'm going to share this solution with you. Motor vehicle account will be easy for you. There is something I want to rush to. Petty cash account will be easy for you to identify. Loan account, you have the loan account. You have the equipment account. You bought equipment from Super Furniture. Then you have a debtor, Dikagwa and Sons, who didn't even pay during the period, but you bought goods on credit. You made purchases. Remember, purchases you take to profit or loss. It doesn't have a balance carried forward. That one now I emphasize as many times as I can. Same for all expenses and sales. Then in shambles, as someone the other time was asking about receivables being separate accounts being presented. So you can see this in this solution. So you can do it. You may sum up all the receivables if they are quite many. So in shambles, we made sales of 9 million. Actually, the sales were 10,620,000. This was the invoice, inclusive of VAT, 1,620,000. So that's how you present that T account. You present your VAT. You present your VAT. You present also the sales. Why are all these figures on your debit side? Because you're demanding in shambles this entire 10,620,000. Remember, he's a receivable. You've sold goods on credit and you've issued an invoice of 10,620,000. So he's going to pay the entire 10,620,000 it's what you're demanding from him. But of that 10,620,000, there is 1,620,000 that is for the government or the taxman. So on the credit side, we are going to present what Enshambles returned. There were goods of 1 million. Then on the 1 million, we shall also credit the VAT of that 1 million, which was 180,000. Then he paid through the bank 5 million, and also through the bank 4,240,000, and discounts allowed of 2 million. Okay. So sales account, that one is quite easy. We went through that. And we always take to our profit or loss. Now we also prepare a VAT account. We also prepare a VAT account. So if you can look at our VAT account, it has the credit side. VAT is a liability. It is our liability towards the government. It is our liability towards the taxman. So when you're preparing your VAT account, it's supposed to have a normal credit balance. It is a liability. So that's why we credited VAT with 1,620,000. However, the only VAT that was debited, which means that was paid out or that was taken off of the 1,620,000, was that of the goods that were returned, because there were sales returns. We sold and the person returned goods of worth 1 million in shambles. So that 180,000 is what we are deducting, because in the transactions, nothing was mentioned about Kasango paying VAT to URA. These guys didn't pay that VAT. So that's why you see that your balance carried forward is 1,440,000, and that is on your debit side, and it is going to fall back to your credit side, which is its normal balance, at the beginning of next period, 1,440,000, which means Kasango closed off the accounting period with a date of VAT of 1,440,000, because in the transactions, yes, Enshambles paid him, but there is no transaction that showed that Kasango paid VAT to URA or to the tax body. So that's why this account appears like this. So don't assume for Kasango and say, okay, since Kasango was paid the entire amount by Enshambles, the data, then also the VAT paid it. No, it is a transaction on its own. When you pay VAT, you show it in your books that we paid out VAT or any taxes. So we also have a returns inward account. We have a returns inward account. Remember, it reduces your sales. That's why it's on your debit side. Sales are on your credit side. It has a credit balance. So when the goods are returned, you debit. And you take that to your profit or loss. It turns inwards. And I showed you in the previous session how we less the returns inwards in your profit or loss. You have your rent account. You have your discounts, discount allowed. That time you looked at discounts received. Now you've allowed a discount. And a discount allowed is an expense. It's like an expense. It also reduces your sales. So it's here on your debit side. You debit Enshambles to the discounts allowed. So I have quickly run through these T accounts because I'm going to share this solution with you, and you're going to go back and look at the T accounts one by one, one by one.
Would you share?
Yes, please.
I'm just asking, are you going to share the original question as well so that I'm able to perform this exercise as well?
Can someone reshare that question in the group? Have you joined the group, Joseph?
The WhatsApp group, yes. I joined today.
All right, someone help me reshare that so that you can follow. And a solution for Kasango and Lokodo. So these are our T accounts for Kasango. So let me just quickly go back to the introduction of double entry for our colleagues to just be able to catch up with us. Okay. And I think today a good number of them also have not joined in, which is quite unfortunate. But for those who are available, let me just run through that introduction or the basics of double entry. Let me run through the basics of double entry. So double entry is basically reflecting a transaction on two sides. That is the debit side and the credit side. How that transaction is affecting the credit side and the debit side. So for every transaction, that is accounting. For every transaction, we must see how that transaction affects the credit side and the debit side. And double entry bookkeeping is based on the idea that each transaction has an equal but opposite effect. Every accounting event must be entered in ledger accounts, both as a debit and as an equal but opposite credit. So that is basically what double entry is. So the ledger accounts, which we've been looking at, those T accounts or ledger accounts, with their debit and credit side, are kept in a way which allows the two-sided nature of every transaction to be recorded. This is known as the double entry system of bookkeeping because every transaction is recorded twice in the accounts. So for example, we've seen bank and capital of 10 million. So two accounts here are being affected, that is bank and capital. And we shall show in the bank side, on the debit side, that capital came in of 10 million into the bank. Then we shall go to the capital account and we shall credit capital with bank, okay? We shall credit capital with the bank. That's what ledger accounts are all about, but also our journal entries. So the summary is this. Increase in an asset. When an asset increases, we make a debit entry. You've been hearing about the bank with debit. It's because bank is receiving money. That's why we are debiting it. And bank is an asset. And I'm going to give you a simple list of what? Of the different items under assets, under liabilities, under expenses for your summaries in your notes. So when an asset increases, we debit it. Decrease in an asset, we make a credit entry. For example, bank has an asset. If it is paying out rent, you're paying rent through the bank, you're issuing out a check to your landlord. You credit bank because money is going out. Increase in a liability, we make a credit entry. And an example of a liability is goods purchased on credit. You've purchased from a supplier on credit. You will credit that liability, which is a receivable or that the name of that supplier. You credit. Decrease in a liability, we make a debit. If you pay that supplier whom you purchase goods from on credit, you will debit. Yes, who is asking?
Hamis.
Okay, Hamis, yes, please.
And now, madam, there is something which confuses me in normal day-to-day running of the business.
Yes, please.
When they say your bank account has been debited with, for example, 500,000, then it has been credited with 500,000. What do you try to impose?
Okay, good question. Good question. Let me share my Excel and explain it to you. Let me share my Excel and explain that. That's a very good question. And when we start dealing with financial statements, you're going to realize that you asked a good question. So, when we shall go to our financial statements, so the different kinds of financial statements, we will look at different companies. Now, in the normal operating day-to-day business, for example, if we are dealing with a company, maybe it is manufacturing goods, or we are dealing with a business, a trader, or we are dealing with a person who is owning their personal business, they are offering services, So this trader makes sales, okay? Makes sales, and that is revenue. Revenue. Let me just put here. Debit, credit. So when this trader that we are talking about, when he sells and makes revenue, are you going to debit, are you going to credit?
Credit the
That's
sales.
sales account. We do what?
Credit the sales.
We credit the
credit.
sales.
Okay, so we credit the sales. For example, it is like 10 million. We shall credit that 10 million. Okay. Now, we have expense. Let me hope I'm using an example that will what? Will bring out what I want to explain. So expenses, what do we do? Do we debit the expenses? Do we credit?
Debit.
We debit. So this same trader gets a loan. Do we credit? Do we debit? And this loan, I can say in brackets, is a liability. Do we credit? Do we debit?
Debit. I think you credit.
We shall credit. It's a liability. We shall credit that liability. Okay. Then this trader sells, makes credit sales. Which is an asset to him. Shall we credit? Shall we debit?
I think debit.
We shall debit his sales. Maybe they are 7 million. Now this is the normal day-to-day. This is the normal, what we are used to. So now this is what happens to a financial institution or the bank that you're talking about. Stock bank. For those of us, maybe some people might be on this call and they work in the bank. When the bank is to make sales or revenue, it is either through bank accounts, opening bank accounts, whatever fee people, let me just put fees, form. We can call them bank charges, actually, bank charges. bank charges, etc. I'll stop there. But also when they open accounts and get accounts, they count them as sales. So they will what? They will credit their sales inside there. This one doesn't change. So now, when you deposit customer deposits, personal accounts. When customers deposit money on their personal accounts, do you think that is an asset to the bank or it's a liability? When you deposit money on your account, is it an asset to the bank or it's a liability? Timothy is saying it's a liability. Anyone else with a thought about that? Is it an asset? Is it a liability? So, Timothy, do you care to explain to us why you think it's a liability to the bank when you deposit money there? Because it's not for the bank, it's for the customer. Okay. Even Joseph agrees it's a liability.
It is because the bank has an obligation of safeguarding customers' deposits, so it is a liability.
So even Hamis is agreeing. So Salome, why do you think it's an asset? Salome thinks it's an asset. Would want to hear from her or Madine. Why do you think it's an asset?
Well, I think it is an asset because normally banks use clients a deposit for other investment, but of course with knowing that there are certain cash that will be kept somewhere for meeting these daily obligations. So I think it's an asset to the bank.
Okay. Yeah. All right. So also Salome is telling us that because the bank uses the money we deposit for its activities. That is right. But however, it is a liability to the bank. It's not their money. A liability, I don't know whether when you are being introduced to this paper, they defined a liability for you. It has a future obligation in it. They are obligated to pay back that money. When I need my money, I need my money. So if they've lent it out or invested it somewhere, it's like they've borrowed money from me and they are using it. It is not their money. The only money that they own is these fees and bank charges, or the money or the interest they've made from investment, or the interest they've made from they charge on my account or something like that. That is what is their money. But the money I've deposited on my account is not their money. So since it is a liability, what does the bank do? Does it debit or does it credit that account, which is your account? Because it is a liability to them. Are they going to debit it? Are they going to credit it? When you deposit money on your account and it is a liability to the bank, in their books, are they going to debit your account or credit your account? They will credit your account. Good. For example, you've deposited your 1 million there, they will credit. your account. Now, if the bank gives out a loan, to you, a loan or so if the bank gives you a loan or gives out a loan, which means it is in quotes their money that they are giving out. They are giving out their money to you. Is that an asset to them? Is that a liability to them? It is an asset to them. A loan is an asset. A loan is an asset. So they will debit. Maybe they've given out a loan of 5 million. They will debit their loan account with that 5 million. Sorry about that. So when they give out a loan, it is an asset to them, so they debit. So now this is where the logic comes in. I mean, what we are asking about. So if you deposited money on your account and it is a liability to the bank, when you withdraw that money, what do they do to that account, this liability of theirs? What are they going to do to it? Are they going to debit it or credit it? Because now when you withdraw money, the liability is decreasing. Are they debiting? Are they crediting?
They do debit.
Now you have your final answer. So let me just squeeze it for you here. Customer withdraws money from personal account. This decreases the liability. So if it is like a T account, let me just form for your T account here. For example, if it is let me see. You have your debit, you have your credit. So Hamisi, you make a what? A withdraw? No, a deposit. We shall start with a deposit. A deposit. I'll not put a date of how much. We make a deposit of 10 million on your account. They will credit your account. Then you will make a withdraw of maybe 5 million. So your debit side will have a total, your credit side, sorry, a total of 10 million. Then also expect the same from your what? Remember now we are balancing off this account. So you have a balance. Balance carried forward. Now this is the bank reporting, not you. It's the bank reporting for your account. You have a balance carried forward of 5 million, which means your account balance is that. And to the bank, they'll have to the next period a balance brought forward at the beginning of the next period. Maybe it's the end of the month and they are balancing off their account. Balance brought forward of the same amount, this one, which is a what? A liability to them, lying on the credit side here. So that's how it is. But I've taken long explaining it because I know even other concepts, you're able to understand them through the explanation of double entry. So Hamisa, are you good to go? Do you understand why they debit and credit your account?
Yeah, thank you, madam.
So when we shall go to financial statements, you get if they give you a trial. I remember in my sitting of financial accounting, the examiner brought us a company and it was a financial institution and people misfired because the trial balance was interchanged. This is a financial institution and people were asked to prepare the statement of financial position. They put liabilities in assets, they put assets in it, and that's how people failed that question. But if you understand this, that now this is a different entity, how does it operate? How does it gain its income? How does it, when the people deposit money, what does that mean to them? When people withdraw money, what does that mean to them? When they give out loans, what does that mean to them? Then you're able to answer that question. Okay. Let me quickly go back to the introduction of double entry. For some of us who went through the introduction, this is like the third time. Please don't get tired, but I know it is also helping you. But for the sake of our colleagues, let's do that. So we said when we decrease our liability. For example, we've looked at a financial institution, which I don't want to dwell on, because our examples are normally the normal running of business. We shall debit that liability. For example, if we have I was using a credit supplier. We bought goods on credit and we pay the supplier money. We shall debit the liability because it's decreasing. Then when capital increases, we make a credit. Capital, we credit it. Decrease in capital, we make a debit. When we expense, we make a debit. And when we get income, we make a credit. Now you realize why expenses and income are taken to profit or loss, because they have one side. You either debit or you debit the expense or you debit the expense. You're not going to credit it. There is no other way. That's why it doesn't have a balance carried forward. Then income, you credit it. It doesn't have the other side. Whichever side, which is the balance carried forward, is going to your profit or loss. Okay. So let's look at another summary. A debit will increase your asset. It will decrease your liability. It will increase your expense. And a credit will decrease your asset, increase a liability, and increase your income. So the basic rule, which must always be observed, is that every financial transaction gives rise to two accounting entries, one a debit and the other a credit. So the total value of debit entries is the nominal ledger. In the nominal ledger is therefore always equal to any one time the total value of credit entries. That's why we have to balance off those sides and get either balance carried forward on a debit side or credit side, because we always have to have that equal figure on both sides. So which account receives credit or debit depends on the nature of the transaction. So the T accounts that we've been looking at. So for the asset, your T account will have the asset account. For example, it is a motor vehicle, bank account, cash account, receivables account, etc. And when that asset receives or increases, you debit. And when it decreases, you credit that account. A liability, still the T account of the liability, whether it is a loan account, whether it is your VAT account that we've looked at, whether it is a payables account, you've bought goods on credit, whether it is, which are the liabilities there? We can go with those. When it increases, you credit that account. For example, if you've bought more goods on credit, you increase, you credit. And when you pay out, you decrease, you debit that liability account. Your capital account. When capital is introduced into the business, you credit the capital account. And if money is taken out of the capital account, you decrease it. Or you've paid out from that capital account, you decrease. Income, you can see income has only one side, which is credit. So whichever balance is this side, you take to profit or loss, or your income statement. profit or loss statement or income statement. Your expense account, you debit. Balance, profit or loss or income statement. So for journal entries, those ones, they are not quite difficult. So for your journal entries, the ones we've been looking at, you name the account to be debited, you state the amount, the name of the account to be credited, you state the amount, and you state a narration. In some cases, you may not need to state the narration. But your standard journal, there is a narration. Even for some of us who use systems for accounting, for example, QuickBooks, there is that space for narration of the transaction as you make your journal entries. So that was a quick run through of the double entry. Some of us who have questions and you just joined the session, please you inbox me. Now let me go to what was the main thing for this session. Good enough, we are still on time. That is the preparation of your trial balance or trial balance extraction. Kindly note, all this is double entry. All this is still double entry. You can't extract a trial balance if you didn't make journal entries, you didn't prepare your ledger accounts or T accounts to lead you to the trial balance. And the trial balance will lead you to your financial statements. So how do we extract our trial balance? So what is a trial balance? Sometimes students confuse it with a balance sheet. They are not the same, completely different. A balance sheet is the statement of financial position of your company. Why it is called a balance sheet? Because it has an equation in it. Assets are equal to capital plus liabilities. That your total assets have to equal to your capital plus liabilities. That's why it's called a balance sheet. Which means if your total assets are 20 million, your total capital and liabilities are also 20 million. So it's not the same as your trial balance. Don't confuse the two. Actually, your balance sheet is prepared from information from your trial balance. So what is a trial balance? A trial balance is a list of closing balances of ledger accounts on a certain date. So when we prepare our ledger accounts, for example, was it Babiri told us when she prepared the T accounts for Kasango, her balance for the capital account was 14 million. So that balance, which is 14 million, closing of that ledger of capital is what we take to the trial balance. And other accounts, your bank account, your cash account, your like that, they are balances from the T accounts or ledger accounts. So the trial balance is the first step towards the preparation of financial statements. So as an accountant or someone who is aspiring into accounting, you will not prepare your financial statements without a trial balance. For some of us who have dealt with taxes, preparing your final tax returns, you have to look at the trial balance because it gives you information about the individual accounts or ledgers that are running in that business. So it is usually prepared at the end of an accounting period to assist in the drafting of financial statements. And we know that financial statements, I don't know whether in the introduction they were mentioned, but we have the statement of profit or loss, or sometimes referred to as the income statement. That is one statement. We have the statement of financial position, or sometimes referred to as the balance sheet. We have the statement of changes in equity, which shows how the company is performing in equity. That is their capital, shareholders, all that. Then we have statement of cash flows, how money has come in and gone out. Then the final one is the notes to the statement. It is also part of the statements. But the key ones for this paper, financial accounting, are your statement of profit or loss, also known as income statement, your statement of financial position, also known as the balance sheet, and your statement of changes in equity. Those are the ones covered in this syllabus that are key to you. And that information is going to come from the trial balance. So how do we prepare our trial balance? During the preparation of the trial balance ledger, during the preparation of the trial balance, ledger balances are segregated into debit balances and credit balances. We are back to double entry. So if you don't know that your sales have a normal credit balance, as you're preparing your trial balance, you're going to misfire. You're going to take your sales balance to the debit side instead of the credit side. If you don't know that your purchases or expenses have a normal debit balance, you take that balance into the credit side instead of the debit side. However, we are going to see cases where it may happen. Yeah? We are going to see cases where it may happen that your sales, rather not sales per se, but maybe there is an element, or there is an item that has maybe a debit balance, a normal debit balance, but on the trial balance, it is going to lie on another side. I can use an example of the bank. If you ended up with a bank overdraft, you ended up with a bank overdraft, which means in quotes, the bank was demanding money from you. You over-expensed on your account. You're not going to have a normal debit balance on that bank account in your trial balance. It is going to be on the credit side. So for an accountant who has gone through this class and who understands double entry, when you interface a trial balance that has a bank account with its balance lying on the credit side, you immediately know these guys are in debt. These guys are what? Are in debt. Their bank is on the credit side. It has a credit
could you repeat that?
I beg your pardon?
Could you repeat that kindly? Could you please repeat what you just said?
The bank is an asset, okay? So it has a normal debit balance. Let me demonstrate it as I explain it, though I know it's going to come ahead, but let me demonstrate it now. Your bank balance is supposed to be, let me just use the same format. So you have your bank account. Running your business, you have your bank account. So you will deposit money. I'm going to make a summary, by the way. I'm not going to list the expenses and the what. So you make a deposit. This is a bank account. So you make a deposit on your bank. You're running your business maybe of 100 million. Then at the end of the period, you have made total expenses. Let me put this total deposit. Of 100 million, but you've made total expenses of 120 million. So for us, our question here is, your bank account is an asset and it's supposed to have a normal debit balance. And when I say a normal debit balance, it means, let me put dates. Let me 1st January 2025. Or it can be 31st December. We are ending that period. So we have, these are our total deposits by the end of the financial year. Let's say it's running like a calendar year. Then also our total expenses as at 31st December 2025 are 120 million on that bank account. So the credit side of this bank account is bigger than the debit side. Normally, it could have been the other way around, that the debit side of the bank account is bigger than the credit side, which means that you have money in your bank. Your deposits are more than your expenses from the bank, because your expenses are this side of the credit side of the bank. So if you've expensed 120 million and you had 100 million on the bank, it means your deposits were less than the expenses through the bank. And these expenses are through the bank, not every other expense, maybe cash or what, but expenses. So which means on 31st December 2025, you're going to have a balance carried forward of 20 million, which is going to be your balance brought forward on, which date is this? 1st January 2026. So this is the balance we are talking about, this one. The balance carried forward, the balance brought forward. But for your purposes, it's this balance brought forward, which is the same amount. Where is it lying? Is it on the credit side? Our balance brought forward, is it on the credit side? That's what you take to your trial balance. So this is abnormal for your bank. So which means in your trial balance, you have a credit balance, this one, on your trial balance for bank. But in the normal sense, it could have been the other way round. Let me just reverse. Maybe you made expenses of 70 million from your bank. Not 700, 70. So which means the 100 million is our balancing figure here, because rather it's our total. Because the debit side is bigger than the credit side. So which means it swaps, and our balance carried forward. This is on the 31st December 2025. Someone is writing on my screen. 31st December 2025. Our balance carried forward will be 30 million. And this will be brought forward on 1st January 2026. So this is what we call the normal debit balance of the bank account, because the ideal could be you spend what you have in the bank. But sometimes it's not like that for some businesses, for some people. They overspend because maybe they've received overdrafts from the bank. So that's what I was trying to explain, Joseph. I don't know whether you've gotten it. So
Yeah,
on your
I got it.
Okay, good. So on your trial balance, the normal presentation of your bank account is on this debit side. But if it happens that it's on the credit side, like the example I showed you of the 20 million, the first example, it means this guy is ended up with a debt in the bank. So that's what I was trying to put across. But when we look at practical examples, you'll be able to appreciate some of these concepts. So assets, an asset and an expense account, or assets and expense accounts appear on the debit side. That's what I've been trying to bring out for the bank, which is an asset. Assets and expense accounts appear on the debit side of the trial balance, whereas liabilities, capital, and income accounts appear on the credit side. So what is the purpose of our trial balance? It acts as the first step in the preparation of the financial statements, and it is a working paper that accountants use as a basis while preparing financial statements. I know some of us have interfaced trial balances and you're like, now what does this mean? So now I know you appreciate where it's coming from. It's coming from, that figure you're seeing comes from a certain ledger account or T account. So it ensures that for every debit entry recorded, a corresponding credit entry has been recorded in the books in accordance with the double entry concept of accounting. If the totals of the trial balance do not agree, the differences may be investigated and resolved before financial statements are prepared. So you can get instances which are quite common in your practice where the trial balance is not balancing. However, for some who use systems, the system balances it off and it will fool you that it is balanced, yet it is not. But if you prepare it manually, you may find that it's not balancing. Your debit side maybe has a total of 50 million, and your credit side of the trial balance has a total maybe of 45 million, and there is an imbalance of 5 million. So the debit side has to equal to the credit side when we enter all those ledger balances in the different accounts on the trial balance. Then 3, trial balance ensures that the account balances are accurately extracted from accounting ledgers. So where you will find an imbalance in the trial balance, you're forced to go back to those ledger accounts to find out where the error is. And we shall look at the errors of the trial balance. I think it will be one of our next session. When the trial balance is not balancing, what do we do? How do we work out those errors? Then number 4, Timothy, kindly mute. Timothy, kindly mute. Number 4, trial balance assists in the identification and rectification of errors. So when you enter like the ledger balances into that list, the way we are going to look at it, we are going to use Lokodo's example to look and prepare a trial balance in this session. So in case you list all those accounts, indicate their balances, those that lie on the debit side and those lie on the credit side. And there is a difference. The trial balance is not balancing. Then you're able to tell that there is an error. So you go back to rectify that error. So how does the trial balance look like? It looks like that. It will have the title of the company, and you indicate that is ABC, for example, ABC Uganda Limited, trial balance as at 30th June 2022. So you have the column of the account title, then you have the debit side, you have also the credit side. So you have accounts like capital, you credit. Furniture and fixtures, which is an asset, you debit. Buildings and motor vehicles, which is an asset, you debit. Creditors, trade payables, which is a liability, you credit. Debtors, stroke trade receivables, which is an asset, you debit. Opening stock, which is an asset, you debit. Purchases have a normal debit balance, you debit. Purchases are expenses. Cash or bank, which is an asset, you debit. Returns inwards, that is sales returns. Remember, they decrease your sales. And you remember that the sales, you credit them. So now if there are returns inwards, you debit. Returns outwards, they decrease your purchases. And your purchases, remember here, you debited your purchases. So when you return goods to the supplier, you credit. Sales, I've explained that, you credit. If you return the sales, if the sales are returned, you debit. Drawings have a debit side because drawings also affect your capital. Bank overdraft loans, you credit. Administration expenses, or all expenses in every expense, maybe it's rent or salaries, etc. You will debit. Now remember, you're looking at the normal business. This is not like a financial institution. Some may be the same, some will differ for a financial institution. But for now, we are only dealing with if it is a sole trader, if it is a partnership, if it is a trade, if it is a non-profit, a company, manufacturing concern, that is your trial balance. That is the layout of your trial balance. So as I give you a few minutes to copy that layout, if anyone has an inquiry or question, please raise it. I'm giving you about 3 minutes to copy that layout. I don't want to share it. I want you to copy it and put it in your notebooks.
On paper or in Excel?
Whatever is you're comfortable with, wherever you're recording your notes for this session. When we are done copying, please let me know so that we look at the practical example of our trial balance. So this outline kind of also gives you what lies on the debit side, what lies on the credit side. Okay. Time is not on our side. So the trial balance, for some of us who have not completed, I'll go back to it. Or you also, the example will give you that layout properly. So the trial balance has limitations, which we need to look at. And one of them, I'm going to share this slide with you. The trial balance only confirms that the total of all debit balances match the total of all credit balances. So that is a limitation. In most cases, it's not the case, and we have some errors. Then a trial balance totals may agree in spite of errors. An example would be an incorrect debit entry being offset by an equal credit entry. For example, you may have deposited 20 million in your bank account, which means you have to debit bank with 20 million. And maybe if it is from capital, you credit capital with 20 million. However, as an accountant, which normally happens, you make a miscalculation or a misrepresentation. You debit bank with 15 million and credit capital with 15 million. That trial balance will still balance with that incorrect amount, and it will not recognize that error. So that is a limitation. 3, a trial balance gives no proof that certain transactions have not been recorded at all, because in such a case, both debit and credit sides of the transaction would be omitted, causing the trial balance totals to still agree. You may work out all your accounts. Let me use expense accounts. Maybe you expensed on rent, expensed on salaries, expensed on stationery. What else? You expensed on utilities. Then you will give us the figures, the balances of your rent. You give us the balances of your so the trial balance, I've been giving an example of rent, salaries, stationery, utilities. So you may give us balances of rent, you give us balances of salary, the balance of salaries, you give us the balance of what? Stationery. Then you omit utilities. You have omitted utilities. That is it, it's a done deal. The trial balance will not recognize that error. It will not recognize that error because it will be completely omitted. So this is the example we are going to use. Now this is Kasango. But since I've been using Lokodo, let me leave Kasango and we go to Lokodo. And go to Lokodo. So this is what we are going to use. The following balances were extracted from the books of Lokodo Enterprises Limited for the year ended 31st August 2020. So these are the balances on our ledger accounts or T accounts, which we are going to prove. Cash 3,840,000. Bank overdraft 9,717,000. Capital 5 million. Rent 1 million. Sales 8,760,000. Purchases 3,660,000. Drawings 340,000. Returns inward 680,000. Salaries 1,120,000. Motor vehicles 10 million. Motor expenses 260 million. Discounts received 1,083,000. Accounts receivables, Kamoga in brackets 2,760,000. So extract a trial balance as at 31st August 2022. That is the trial balance for Lokodo. We've been required to extract a trial balance. So I'm going to quickly ask, you'll just reply in the chat. For cash, are we reflecting this balance on the debit side or the credit side of the trial balance?
Debit.
Okay, I'm waiting in the chat also for all answers. Thank you very much for the response. Good. A good number of us are agreeing with debit. Bank overdraft. Are we debiting? Are we crediting the bank overdraft? We are crediting. It's a liability. Good. Capital 5 million. Are we debiting? Are we crediting the trial balance? We credit. Good. Rent 1 million shillings. Are we debiting? Are we crediting? Some of us are not typing. I'm seeing the common people. I'm seeing Salome, Joseph, Timothy, Gertrude. Some of us are not participating. Please let's try to participate. So we debit, good. Sales of 8,760,000. Do we credit? Do we debit the trial balance? Which side are we taking this 8,760,000? Is it on the debit side? Is it on the credit? So most of us are saying credit and Mading is saying debit. So Mading, we credit. Sales have a normal credit balance. Sales have a normal credit balance. Purchases of 3,660,000. Do we debit? Do we credit? Purchases, we debit. Good. Drawings of 340,000. Do we debit? Do we credit? This person takes out money for personal use. We debit. We have returns inwards, and we said these returns inwards affect our sales. Do we debit? Do we credit? Do we reflect that figure on the side of credit or debit of the trial balance? Debit. Okay, I like what I'm seeing. It means that we are really following through. Salaries, do we debit them? Do we credit? Do we reflect the figure on the debit side? Do we reflect it on the credit side? Salaries, we also debit because they are expenses. Motor vehicle, 10 million. They purchased a motor vehicle at 10 million. Are we debiting? Are we putting that figure on the debit side or credit side? Debit. Good. Then motor vehicle expenses, are we debiting? Are we crediting? So discounts received reduce our purchases, but they are also an income of a sort. Do we reflect this figure on the debit side or the credit side of the trial balance? You credit. Good. Accounts receivables, do we debit them? Do we credit the trial balance? We debit. So we are good to go. So let's go and answer this question and see how we prepare our trial balance. Please don't be worried. I'm going to share this PowerPoint with you so that you refer back to the question. But that information extracted is actually from our T accounts here. If you can see. This is your cash, 3,840,000. Your bank, 9 million, which is the bank overdraft, 9,717,000, because we spent more than what we deposited. Capital account, 5 million. I highlighted the balances in red. Rent account, 1 million. Sales account, 8,760,000. Purchases account, 3,660,000. Drawings account, 340,000. Returns inwards, 680,000. Motor vehicle account, 10 million. Motor vehicle expenses, 260. Salary, 1,120,000. Discounts received, 1,183,000. Accounts payable, 3,660,000. No, accounts payables, I think, didn't have a balance. It is zero. That is a mistake. There was no balance. These guys closed off this account. We are good payers. Accounts receivables, we had a balance, 2,760,000. Now I want you to observe a trick here. I want you to observe a trick here for your trial balance. If the balance carried forward, which is in simple terms, your balancing figure lies on the credit side, just know the figure you take to your trial balance will lie on the debit side, this one here. So your balance carried forward, which is always your balancing figure, that is, you get the total of the credit side and get the total of the debit side. So if the total of the debit side, for example, in this case of cash, the total on the debit side was bigger, 4,640,000. But the total of the credit side was how much? The total of the credit side was this, before we balanced it off, was 800,000, which means 4,640,000 was bigger than 800,000. Which means for us to arrive to this total, because the bigger total is what we take as the total for the T account on both sides. That is the credit side and debit side. That is a rule. It's undisputed. It's what we follow in accounting. So since our biggest total was 4,640,000,
could you say that again?
What I'm explaining, that, for example, in this particular example, let me just first delete this. In this example, we reflected the debit side of the cash account, the transactions on the debit side, and reflected the transactions on the credit side. And on the debit side, we had capital, 3 million, and Chagulanyi, who paid us 1,640,000, giving us a total of 4,640,000. Okay. However, on the credit side, we made drawings of 340 from cash and paid rent of 200,000 and also made motor expenses of 260. So we got a total of 800,000. Now the rule is when you're preparing your T account, you compare these two totals, this and this. Okay, 4,640,000 and 800,000, and you pick the biggest total. So when you identify the biggest total, which in this case is 4,640,000, we eliminate this 800 and make this total the same here. So for us to, literally, this side was 800,000. So for it to come to 4,640,000, there is a missing figure here. There is a missing figure, which is 4,640,000 minus 340 minus 200 minus 260, which is a total of 800. So the balancing figure here, which was how much? Let me just click back. A balancing figure. 3,840,000 is the balancing figure to bring this credit side to 4,640,000 640, which is the same as the debit side. So this is the balancing figure. And always the balancing figure that you determine, if it lies on the credit side or on the debit side, it is your balance carried forward, because you're carrying it forward from this end of the period, which in this case was 31st August 2020, the end of the month. So what I was explaining, that the trick, or what you should have in your mind, wherever this balancing figure, let me put it for you here in brackets, balancing figure, this one. Whichever side it lies on of the T account, whether on the debit side or credit side. So in this case, it is lying on the credit side. The trick is, when you go to your trial balance, this figure is going to flip over to your debit side. You reflect it on your debit side. Now students sometimes get confused and they're like, but the balancing figure is on my credit side, which means when I take the figure to the trial balance, it is on the credit side. No, you take it to your debit side and you're going to see for cash, it is a debit balance, this one. And I've reflected it for you here because it's the balance also brought forward. It flips over to the debit side. Let me give you another example which is different. This one is an unusual occurrence. This is capital. So capital, when you receive capital, you credit it. We received capital, banked it 2 million, and also retained cash of 3 million. This is 5 million. So this 5 million is our total, because this side we didn't have any debits from the capital account. So this 5 million is what we take here. So still our balancing figure here, balancing figure is lying on the debit side, which means when I go to my trial balance under capital, I'm going to reflect this 5 million, not on the debit side, but on the credit side. So even if it is an account, for example, this bank account here, this bank account, which could have had the normal balancing figure this side, indicating that you had more deposits than withdrawals from the bank account. But this time it is a different scenario. Your balance carried forward is lying on your debit side. And this is we've agreed it's always our balancing figure lying on the debit side, which means when I go to my trial balance, I'll either indicate that bank overdraft, which is a credit, or they can just put bank account and put a credit balance. So for you as an accountant who has sat in this profession, when they indicate a bank account that has a credit balance, you immediately know that is a bank overdraft. Or the examiner will give you the bank overdraft and indicate still the figure on the credit side. So that is the trick I also wanted you to pick. Because in your exams, they can bring a number where you have to prepare a trial balance. It can come. So for you to be able to at least try to attempt that question. That is a trick I wanted to bring out. Like, it can try to simplify your understanding, because I know normally students get confused about that the balancing figure is on the debit side. Now, why am I taking it to the credit side of the trial balance? But in actual sense, if you understand that cash, which is an asset, has a normal debit balance, even if its balancing figure is on the credit side, you know automatically it is going to the debit side. But sometimes, like I've said, if you've overdrawn your cash account or overdrawn your bank account, it can be the other way round. Friends, are we together? You can confirm in the chat that we are together about that. Are we together? I'm getting one yes from Timothy. Gertrude, yes. Okay. Yes, good. These concepts are easy if you just try to understand them from simple terms, or the way in their simplicity, and you don't complicate them. Because when you complicate them, they become even harder to understand. But that is an easier way. And trust me, people can be challenged about double entry even up to when they integrate. But for us here at Apex, we try to make you understand double entry, because financial accounting is the foundation paper for your CPA course. So now we are going to enter those figures. We are going to enter those figures quickly. Actually, I see time is not on our side. We have very few minutes, but since we've agreed from the example that cash, actually, let me just go and pick these figures for you so that you understand them. Blunge here. Your cash is here, 3,840,000. Then your bank or bank overdraft. Here we've simplified it for you, that bank in brackets, bank overdraft. But for your examinations, they will not, the examiner may be silent. He will just give you bank with a credit balance. So you definitely know it is a bank overdraft. And that is the figure we have indicated here. It's here, 9,717,000. Then capital is on the credit side. We've agreed capital is on the credit side. Is the capital account, 5 million. So we have capital. Rent is an expense. It's on the debit side. Rent on the debit side. $1 million. Then we have sales. Sales are on the credit side. Sales are on the credit side. $8,760,000. Then we have purchases. We have purchases of 3,360,000. We have drawings. Drawings are on the debit side. drawings of $340. Then we have returns inwards, which are lessing our sales. So we shall debit returns inwards 680. Then we have motor vehicle account. Motor vehicle is how much? $10 million. Then we have motor vehicle expense. Motor vehicle expense. Motor vehicle expense. 260. We have salaries, which is also an expense. $1,120,000. We have discounts received, which is sort of an income, but it also reduces our purchases. So we credit it. Discounts received of $183,000. Just a minute, let me just go back. Discounts received of $183,000. Then the final one, accounts payable, receivable. It's an asset. Accounts receivable. How much is it? Because literally, accounts receivable remained with only Kamoga, but it's our accounts receivable. So that's how we get the balances from the ledger accounts. Let me just try to want to make this smaller so that we can all view it in a go. So you can see that we literally just got these balances from these ledger accounts, and the debit side is giving us a total of 23,660,000, and the credit side is also giving us the same total of 23,660,000. That's why it's called a trial balance. So for our practice, I'm going to share that PowerPoint with you, and you're going to prepare the trial balance for Kasango. The balances are there for Kasango. I'm going to share this solution of Lokodo. Please don't worry, I'm going to share the solution for Lokodo because we are time bound. I'm going to share a PDF of Lokodo, but for your exercise, you're going to prepare the trial balance for Kasango with these balances here. it is going to be easy for you, but also you refer back to the journal entries that we made. So today we shall end here, and hopefully next week we shall start looking at errors. For some of us who have queries, I know some of us have just joined in and you have questions, please inbox me. Inbox me. I'm also part of that group. You can inbox me. Let me see, someone is asking for T accounts for Kasango. Okay, I didn't share those. Sorry, I'm going to share T accounts for Kasango. Then, but for your trial balance, still, these are the balances you're going to take to your trial balance, just as we've done for Lokodo. You're going to go bank, put the bank where it's supposed to be on the trial balance, whether on the credit side or debit. Capital, the same. Motor vehicle, is it on the debit, credit? Petty cash, debit, credit, like that, on that trial balance. And in the next session, not in the next session, you need to share with me those solutions in my inbox. Try to share those solutions in my inbox so that I look at them before the next session. Any other inquiry before we close off class? Okay, I'm going to indicate my number. Swaba. Then Joseph, those questions have been reshared. The question has been reshared. I'm going to indicate it. Bavirie, in case you have an inquiry, please also inbox. Okay, all right. Have a good night, and we can meet on Monday next week, God willing.